Hello, everyone. Good afternoon. Thank you for coming along. So today my keynote speaker is going to talk about the from capital to infrastructure within weeks. Renewable energy in Australia, the project timeframe is very large for utility scale solar farm or wind farms. I want to talk about what we're doing at NRN and how we help capital get deployed quicker within renewable energy projects. So let's get going. A few years ago, we saw the cost of coal move from $40 a metric ton to over $400 a metric ton. And with 72% of our power still dependent on fossil fuels, such as coal, my energy bill went up and so did yours. In fact, it was announced this morning that your energy bill is going to go up by another 10% in a few weeks' time. Now, of course, there is a solution. Putting rooftop solar and battery on your home can reduce those costs, but with a $20,000 price tag, many are blocked out from doing so. So what if there was a world where you could get an energy plan that included a solar and battery system, just like your phone plan did? So do you remember the days where you had to buy your own phone and get a phone plan attached to it? And now today we all have new phones in our pocket because it was included in your phone plan. Well, that's how we see energy in the future. We see energy plans that will include solar and battery for consumers, which will help renters, it will help homeowners who can't afford it, and also social homes make the transition, meanwhile reduce their cost of energy. So I want to talk to you a bit about the platform. What is NRN? What have we created? Now, we see ourselves as a bit of a marketplace. Like, let's take an Uber. You've got a driver, you've got a rider, or Airbnb with a host and us as visitors. But energy is a little bit more complicated. So we have a four-stakeholder relationship. I'm going to start off with a customer to start off with. A customer will put a solar and battery system on their home. It costs them absolutely nothing to do so. There's no finance associated to this. It's just bundled into their energy plan. The benefit for them, they save about $1,000 a year off their electricity bill. It's about 30% cheaper than what they're paying today. We then work with energy retailers. So they build the product. They'll put the solar and battery as part of the bundle, and the average cost of capital is the average cost of energy is about 30% cheaper. Now, they're selling the energy directly from the rooftop through the battery to the consumer, and then selling the energy from the grid and blending that. And that's where the cost benefit flows through. We then work very closely with the solar industry. Solar retailers have a huge challenge in front of them at the moment with such a competitive landscape. But they sell, install, and maintain our solution, and that helps us be able to scale this product across the country. And then lastly, we work with infrastructure investors. Investors that want to invest in the good, but don't want to lock up their capital for too long before seeing a return. So I just want to talk about the three problems we're addressing for the other three segments before I dive into the private capital space. So energy retailers are facing rising cost of energy, they're facing grid challenges and significant profitability concerns. Consumers, we're all facing it. We see costs surging, increasing affordability barriers, and also financial concerns. But for solar retailers, with 4,500 solar companies in Australia, they're on the race to the bottom. Their sales are down by 50% at the moment, and we're seeing a lot of those companies go bankrupt. But I want to talk about a new asset class for infrastructure capital, which is all around distributed energy resources, being solar and battery at someone's home. So we've packaged this together to be able to reduce the risk profile for an investor dealing with multiple consumers, but also gives them a strong return in comparison to utility scale renewables. So we're buying assets behind the meter. Solar and battery system behind the meter is what we're purchasing. We do have security over the land. We have registered a caveat on the property. And the whole idea is that this asset would be sold at the sale of the property. So that's, I guess, where the transaction happens with this asset. We're currently achieving a 13 to 14% unlevered IRR. And that for us is proven to be sustainable and also significantly more on what we're seeing in the utility side. We get a fixed income for the next 12 years. We don't base our revenue from market volatility or energy generation, nor consumer using energy. We sell the asset at the point of sale of a property, and that will happen within the 12 years or at the 12-year period. That's where the asset is let go. And then finally, for every $10,000 invested, we're offsetting 36 tons of CO2 emissions. So the four bottlenecks that I want to address with, I guess, capital investing in renewable energy. utility scale, we're seeing a lockup of capital between 2.5 to 4 years, in comparison to what we're able to deploy capital in 4 to 8 weeks. Returns are pretty much double. Most solar farms these days is anything between 7 to 9% unlevered IRRs, and obviously it's geared after that. The income style for us is fixed. Our merchant risk is with an energy retailer, not a consumer. We don't, again, trade within the market, or there's no power purchase agreements, as we would see in the large-scale utility space. And then lastly, it's very low regulated. We don't have to have long time waiting for community engagements or connectivity back into the network. We're able to deploy an asset very quickly. So the opportunity is quite big, especially in Australia. And beyond, we do aspirations to go global. For those in the room, who's very familiar with a virtual power plant? Show of hands. All right, some here. Excellent. So for those who don't, a virtual power plant is when we're connecting a solar and battery system digitally into one centralized control. We can dispatch power, we can charge power simultaneously from all of the systems across the country. That is viewed as a virtual power plant. Now, there's huge benefits for this. We've got grid stability, we have access to cheaper energy rates, cheaper distribution cost, and increased renewable within our grid. But the best virtual power plants is when there's no conflict of interest. That said, when a customer goes and buys a $20,000 asset for themselves, they're not buying it for their next door neighbor, and they're not buying it to make the grid more stable. So we've developed a virtual power plant that actually works for the energy sector, resulting in cheaper energy cost. Now, last May, AEMO, Australian Energy Market Operator, launched their integrated system plan. And they forecast that we're going to see at least 7 million homes purchase solar over the next 25 years. We're going to see nearly 2 million homes upgrade to battery storage in the next 25 years, which is an estimated cost of $142 billion spent over the next 25 years in Australia in distributed energy resources. Now, the status quo today is that mum and dad's money needs to be spent on $142 billion. Our view, and what we're doing as an organisation, is that it's the energy sector that can purchase this and not relying on mums and dads. So just to talk a little bit about the total addressable market, I'm not going to go for every segment, but the big limit we are constrained by is workforce. There's 285,000 solar installations that happen every year in Australia. That's $6 billion worth of capital that can be deployed in behind-the-meter renewable energy projects. So just a quick overview on us. We are a technology platform. We sit in the middle. We don't engage with consumers. We work very much with the energy retailer and the solar retailer, and then it all comes together. We've developed a solution where solar installers can go to their customers and sell this product within about 5 minutes of sitting around the kitchen table. We've got asset management software that tells us every 5 minutes the performance on a system, and algorithms that run in the background that alert humans if there is any trends that we should be looking at. And also, we're a bit of energy nerds. We sit with our energy retailers and we explain the best way that they can optimize their virtual power plant to increase their profitability. Our view is the more profitable energy retailers are, the cheaper plans they can produce for consumers, the more consumers we have. We've built a really interesting flywheel. So just some of the team. We are a startup. There's 23 of us in the team. Here's just some team members come from lots of different industries coming together to create this solution. Now, we are currently finishing our capital raise. We've been going for the last 4.5 years. We've got around $15 million of capital deployed over about 800 homes currently. And we just signed up 2 tier 1 energy retailers, and this product will be a mainstream product going into July 1. Hopefully you'll see us. So we're currently closing a $67 million Series A. Thankfully, it's 98.5% closed and done. It's about $1 million left, I think it is. The headline here is we've defined product market fit. We grew by 700% last year, which really showed us how we could scale. And this Series A is a split between senior debt, mezzanine, and also equity, as you can see on the board. But that's a bit about NRN and what we do. Thank you very much for your time.